So finding the deal, you're gonna have to have the skill set of either, I guess, talking to sellers, skills of negotiation are gonna be
Mhm.
very important. You're gonna have to be able, in my opinion, I think you're gonna have to be somewhat savvy in sales because you're gonna have to sell that seller on a reason of why he should, give you his property at a discount.
All right, guys. So, hey, I'm Julian Castle, partner of the Real Estate Investors Group. I'm very happy to be here with you today. We have Rasool. Rasool has done 3,300 units in the past 3 years. This is a guy that knew nothing about multifamily, and he got into it because he wanted financial freedom. He has a goal of buying 4,000 units by the end of this year. And we're going to be talking about some things that are very important to anyone looking to get started in multifamily. And so, Rasool, go ahead and give us a little bit about your origin story, please.
Yeah, for sure. Thanks so much for having me, Julian, man. Yeah, I started off, I've always been pretty studious, and I was taught the whole prescription that we're all taught, right? Even before we became real estate investors, it's the only way to be successful. My parents told me you got to go to school, get good grades, get a job, get a career, climb that ladder, and then put money away in the stock market, until you're 65 and you die, right? I'm like, oh man, it never sat right with me, like from the beginning. And so, right out of high school, I went to the army because I was done with school. I had a 4.3 GPA. I had scholarships to go to UF and FSU, and I was just like, I don't know, man. I didn't feel like going to college. So I graduated in 2001. You guys know what happened. 9/11 happened that year because I was on the fence about whether or not I wanted to join. And when that happened, it was like, that's it. That seals the deal. I got to go serve the country. So I joined military intelligence. I was a Korean linguist for 5 years. And man, joining the military in wartime was not the best decision. I look back on it now because it feels like a lifetime ago. It's like it was 20 years ago. But I look at it as like the best mistake I've ever made in my life, and I would do it again. Right? The people you meet, the bonds you create. What? My phone. That's weird.
What
My,
happened?
my phone decided to turn on right there. Uh,
Oh,
what's it called? And what was I? Yeah, talking about the military. It was a great experience because I learned a lot of like work ethic. Exercise is like a big part of my day. I still wake up at like 4 a.m. I'm like insane. And after I got out of the military, I was like, all right, you know what? I know I said I didn't want to go to college, but I was dying to go to college. Like I need to do something with my life. And so I love video games. My degree is in video game programming, actually. And so I did that. But by the time I graduated, it was around the Great Recession, right? Kind of similar economic times that we're looking to face in the very, very near future, right? High interest rates, people are getting laid off left and right, and also this stuff. And so I couldn't even get a job as a programmer back then. And so I still had to pay these student loans. They were coming out of deferment. And so I started off selling life insurance, which I think was probably the best happenstance along my journey because it allowed me to acquire the skill of sales. Because I don't know if you've ever, just navigating through life, if you have the skill of sales, man, you can get along with everybody. You can, just have a better time communicating, talking to people, building relationships, and doing all those types of things.
yeah.
And I didn't realize how much more that would serve me once I got into commercial multifamily because that wasn't even in the plan, right? And I got burned out from sales. I got my real estate license, sat in one open house, and I was like, this is not it, right? Like being a realtor was definitely not for me. So I was like, you know what? I got this degree. It's been a couple of years of doing sales, so let me go ahead and climb the corporate ladder. And I got started with the government, right? And ironically, I started off with the Department of Housing and Urban Development (HUD), and I started in the multifamily department. Now, I was only an employee there, and I didn't realize the gold mine that I was sitting on because I would go to the concept meetings where they were starting to develop and build multifamily properties from the ground up, and I would see the lenders, I would see the operators, the owners, the investors, I would see everybody, every piece of the transaction. But in my mind, I just needed to climb the ladder, right, and try to get
Yeah.
the salary as I could. So that
Yeah.
was my misstep there. But I ended up climbing really high in the government, got to what I called the salary ceiling,
Mm-hmm.
right? I made it to six-figure salaries. Like, oh yeah, mama, we made it. But I was a senior financial analyst in HUD at that time, and I'd analyzed the finances for hundreds of housing authorities in upstate New York, which is where my portfolio was that I was responsible for.
Yeah.
And one day I sat back and I said, you know what? Let me let me see what it would look like if I analyzed me and my wife as if we were our own business, right? And in doing that, let me put this thing on Do Not Disturb because I keep getting notifications all day. Everybody wants me to look at deals and do all this other stuff. Yeah.
Those
Uh,
important guys.
yeah. Sorry about that. Normally I have it on Do Not Disturb for most of the day, anyways. Um, but I wanted to look at what our finances would look like as W-2 employees. We're both GS-13, Step 5s. You know, it's pretty high in the government. And I was really surprised to realize that with the six-figure income for both of us, we would be like poor by the time we hit 65 based on the rates of inflation and how slow our income growth is.
Yeah.
So that was a red flag for me back in 2016 that, oh man, we got to do something. We got to
Yeah.
figure this out. I think it was actually 2017 is when I really got into like researching, figuring things out. So long story longer, I Googled, how do you get rich? And I found out 95% of millionaires are made in real estate. I was
Yeah.
like, sweet. How do you do real estate? And
Yeah.
I found Bigger Pockets, which a lot of people are, I'm sure, familiar with. Learned about house hacking, so I bought my duplex here in Miami, or when I left Kansas City. Came back home to Miami and lived in one side, rented the other side out. And I was like, man, it only cost us $200 a month, right? Because my mortgage was 2,100, and the rent on the other side was 1,900. I was like, it costs us $200 a month to live in Miami by utilizing house hacking, and I thought that was amazing. And eventually, I got into Airbnb, which I was like, holy crap, that's a lot of money. And then
Yeah.
I told my wife, I was like, hey, what if we moved back in with my mom and dad, and we did Airbnb on both sides? Right? Which we did. She was down. She was like, let's grow the empire, let's grow the business.
Yeah.
And so for us, that one duplex, I think I was talking to you last night about that. It was pulling in $70,000 a year in cash flow. Not that's gross revenue, not total take home net, but still 70K from one property. It was absolutely amazing. The kicker though was, in order for me to enjoy that, right? The property I bought was busted. It was built in 1920, had flat roof, AC problems, everything you can imagine wrong with it. I did my inspections, it passed with flying colors, blah blah blah, whatever. But the reality hit once the we closed on the paperwork and I got that property, everything just started falling apart. And I was at that property probably 3 or 4 times a week, right, throughout the entire time that I owned it. So although the Airbnb money was great, I was like, I can't grow my portfolio because I'm tied to this one thing. What do I got to do? Like, how do I go about it? So
Yeah.
then, what everybody's waiting for. I learned once 2020 hit, pandemic happened, travel stopped, no more bookings, so no more reasons for me to go to the property. I got all my time back, and I was like, okay, let me take a step back. Let me reassess how I'm spending my time, how I'm trying to grow my real estate portfolio. How can I make it worth my effort, right? Because the extra $70,000 a year is a part-time job basically because of all I was doing.
Yeah.
Um, I learned about apartment building, right? I took a boot camp and learned about with Rod Cleef. Took a boot camp with him, and he opened my mind to multifamily. And at that moment, when I understood about how the process of buying apartment buildings worked, it's like everything in my past came together, right? The work ethic from the military, my sales experience, to be able to talk to people, build rapport, with sellers, investors alike, and everything like that, even with brokers, even. And then my experience in multifamily, understanding how that business works, working as a senior financial analyst, right? It's like the whole entire life experience is coming together. It's like, okay, boom, multifamily.
Yeah.
So I invested passively into my first deal, a 76 unit in St. Louis. That was my very first deal in October of 2020. And then on that deal, I learned the ins and outs of how the business would work because I would be on Zoom calls with the KPs and the GPs who were running the deal. And I was like, okay, cool. And the eye-opening thing in that experience for me was it's just real estate, right? For any of you guys listening, I know this is a real estate group. if you know how to, you know, if something breaks in a property, you got to fix it. If a tenant stops paying, you evict them, kick them out, upgrade that unit, redo it, turn it, and then you increase the rents and you move on with your business. It's the same thing in the commercial side of things, except that you have like hundreds of units. So you have to have more systematized processes to be able to handle all that. And that was like the big takeaway for me. So with that knowledge, right? Like the barrier of entry of realizing what it takes to do multifamily, it was like completely removed for me. I was like, okay, I'm gonna go ham. In 2021, I set my sights on 200 units. I was like, I'm gonna buy four 50-ish unit properties. I know that mathematically, from industry standards of what everybody else is doing and people I talk to, other investors I network with, for for every deal that you want to close on, you'll have to underwrite 100 deals.
Hmm.
All right, in my mind, I'm like, okay, cool. I need to do four deals, so I need to underwrite 400 properties. I was like, man, that's more than one a day, 365 days in a year if I go 7 days a week. You know, kick in army hua,
Yeah,
ethic, right? I
I
was like, I was like, you know what? One point something a day is not going to cut it. I'm going to try to do like 3 to 5 underwritings a day,
yeah.
right? So my experience in financial analysis and being able to look at properties and investments and determine which properties are good, which ones are bad, allowed me to go quickly through that process. And so what I didn't realize is in putting that work ethic of increasing the number of deals that I was in underwrite, of course I increased the number of doors that I closed on. So I actually ended 2021 with 858 units. So I ended up closing it was a 42
150
unit,
units.
858 in my first year as a GP, actively going out and doing some deals. And I even had a hotel with my friend Paul up in Madison, Wisconsin, which is a pretty cool thing. So I got a Cambria hotel in my portfolio as well.
Nice.
Yeah, man.
Nice. Paul, we met him yesterday, right? I
Correct.
mean,
Yeah. 6'4", tall, big football player, Iowa, bald,
nose tackle, big guy.
nose, nose
He,
tackle.
yeah, yeah, impressive. That's amazing, Raul. And so now it's been, 2 years after. What
Yep.
are you, 3,300 doors now? Is that right?
Correct. Yeah. So last year I set my sights on 3,000 was the goal. I was like, you know, what would be an insane goal as far as I could realistically imagine, right? Because you know, like I don't know if you guys are into goal setting and trying to manifest a law of attraction, all those types of things. You know, there's a caveat to all that kind of stuff because you can write down your goals of whatever you want, but subconsciously your mind knows when you're lying to yourself, right?
Yeah.
Because if I'm like, all right, you know what, I'm gonna start this year, 2023, it's June 14. By the time December hits, I'm gonna make $1 billion in revenue. All right,
What are the chances that's going to be
yeah,
happening?
yeah. So like if you you know, people don't like the word realistic, but I need to know what's realistic for me based on my personal beliefs, right? Wherever my mindset is at. And as big a stretch with my skill set, with what I could learn, the people I can meet, and the deals that I can do, I was like, you know what? Let me hit 3,000 doors by the end of 2022. I kept saying that over and over and over, writing it down in my journal, doing all those types of things, my affirmations and whatnot.
Yeah.
I'm a big believer, big proponent of it. And I kept saying 3,000 over and over and over. And on the very last day, last business day of last year in December, I think it was December 28th, if you guys want to go check back and look, I closed on a 260 unit multifamily deal in Houston, Hollister Place. And that property put me at 3,042 units. So, yeah, yeah.
Wow, you made it. You made it. That's incredible, man. That is really a real story from someone who actually did it and almost fell short, but just to be real, yeah, he made it and he wrote it on his journal every single day. And so I want you to tell us something about the ins and outs. So what is your role in the GP? And for those of you that don't know, a GP is just a way of syndicating a deal. General partners are the ones who control and manage the deals,
Mhm.
and the LPs are the ones that are passive investors. And so, tell us what you do as a GP in those deals. Like, what did you focus on so that you can do this scale?
Yeah, for sure. I always tell people whenever you're brand new into real estate, and you don't have to start in residential, you can go right into commercial as long as you have the knowledge and the education of how the business works. Because the only two things, unless you're rich or anything like that, the only two things that you can really do is find a deal or
Hmm.
find the money,
Hmm.
right? And then add that value to somebody who has the experience of running these large deals. So you have to do it through partnerships. The best thing about commercial multifamily, in my opinion, is the fact that it's a team sport,
Hmm.
right? I like that because I can play to my strengths, which are analytics, deal acquisitions, broker relations, because I like to talk, I like to network and meet people, which also lends itself really well to investor relations and capital raising, because I love talking to investors about, hey, look, this is why I think you should put $100,000 into my deal because it's blah, 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 reasons A, B, and C, right? And I'm like, the reasons why I believe that's a good deal, I bring out my analytical brain and I explain to them on a very competent level. I've had some very, very shrewd, not shrewd, but very particular, very detailed, scrutinizing investors. One guy ran me through the ringer, and he was like, I think, what was his profession? He was an equities research analyst out of California,
Yeah.
and he was like, his whole entire job for his work was to throw worst case scenarios and figure out what would happen. And I was like, all right, you know what? I'll play this game. I hopped on the computer with him. We were in Zoom, and I was entering all my assumptions into the model. And he was like, what would happen if cap rates went all the way up to like, double digits in multifamily? I was like, for like an A, B class property, like the really nice properties that are right now like 3, 4%. He's like, yeah, I want to see what would happen if cap rates went that much. How much of my investment would be at risk over a 5 or 10 year period? I was like, yeah, man, you definitely be upside down. Crunch the numbers. I told him you're going to be upside down by 60%. You'd have 40% of your investment left. And he looked. He's like, I can live with that. Let's do it. I was like, oh, all
That's
right.
awesome, man.
Yeah, man. Just being able to have the knowledge and the education to have conversations competently is probably the most important thing. I see a lot of people who want to get involved in multifamily, and they are uneducated about how the process works, for one, and they try to take shortcuts. I can't tell you how many emails I get on a regular basis from people who are trying to forward a deal that's listed by a broker. They have the broker's information scrubbed off the pitch deck, or the offering memorandum, and they're adding a 3% buyer's fee. I was
Yeah.
like,
I get
that,
those emails all the time.
yeah, if you see that, throw it in the trash. Like,
Yeah.
I'll tell you right here and there. The reason being is because for us as operators, our whole entire team, right? The whole entire general partnership, every member on that team is going to earn a 2% acquisition fee for doing all of the work on that property from day one until day five, until year five, year 10, whenever that property sells in the back end,
Yeah.
right? That work up front is worth 2%. A broker is getting a fraction of that. Not a
Yeah.
fraction of the 2%, but he's getting his percent on the other side of it. But some joker who wants to forward an email or with information that's not even his is expecting a 3% payday. Like, I've seen people who are they've been doing this for years, thinking that they're going to hit a lottery payday on this, 50, 60, $100 million property. I'm like, bro, that's not how the business works. You're literally wasting your life doing the wrong thing.
Yeah. And it's not like, to be clear, and it's not that that's called wholesaling. And wholesaling can be done right if you find the deal directly.
That's not wholesaling. That's operating as a broker dealer without a license. Wholesaling is when you get the property under contract at a set price with the seller, and then you can assign that contract to a buyer. That's cool,
Yeah.
right? Because that tells me that somebody who's going to actually wholesale a property, they've got some skin in the game, because you got to put some earnest money down a lot of times.
Yeah.
You have at-risk capital to be able to do these large deals. You have inspections and stuff that you have to go through. You have a very fixed timeline in the commercial multifamily space, right? So you can theoretically wholesale a large deal. I know people who've done it. Not even theoretically. I know people who have wholesaled large multifamily buildings, and it's the same thing. If you're going to wholesale a residential property for like 30, $50,000, you can wholesale a large multifamily property if you're direct to the seller, get it under contract, do the work needed, and then find an interested buyer. You can make 300,000, 500,000. I've seen $1 million wholesale deal before,
Yeah.
right? but you got to do it the proper way. It's not going to be from forwarding some broker's information on a publicly listed property that everybody's already seen, and you're just sitting back waiting for that 3%. I mean, like
Yeah, yeah, yeah.
the only way that's going to work is if you find somebody who's really rich and dumb who knows no better, and they're like, I want to try to do this. Which I'm not saying it can't happen, but I mean, I feel sorry for that guy who's going to buy that and lose all that money.
Yeah, usually the guys that are making big money are sophisticated. So
Exactly.
it's the likelihood of that happening is very small.
Exactly.
So great. So yeah. So you have focused on finding the deal and finding the money, right?
Correct.
And so I am aware that you're having an underwriting course that you're doing for free coming up. Is that right?
Yeah, it's not actually just underwriting. It's going to be the whole entire multifamily process from start to finish. It's a 5-day challenge that I'm going to be doing. It's called mymultifamilywealth.com. You guys can go to there and you can sign up. I'm sure there's going to be a link somewhere on this whole entire thing. But yeah, man, spend 5 days with me, learn how the business works, and see if commercial multifamily investing is right for you. I definitely I, I still own some residential properties, but I prefer not to, be inundated with that level of work. Just the amount of hands-on management that I needed in the beginning to grow my portfolio was just way, way too intense. And maybe because I went to the short-term way, but even still, man, I mean, when you burr a house, you're cash flowing maybe 200-300 bucks, which at the end of the year is enough to pay for the repairs from the guy who's moving out, right? It's like, so you're just on this hamster wheel and you do it over and over and over again. And over time, you build up equity, your cash flow is going to be, and yeah, but I was like, why wait 5 or 10 years to do that when you can go ahead and get a bigger portfolio or get a whole entire property with, 50, 100 units all in one location, easily manageable, easy to keep an eye on everything, and your cash flow is going to be so much better.
And you're also mitigating risk because if you have a single family residence and you're renting this out, if your tenant moves out, you're now 0% occupied.
Yeah,
In a big multifamily property, if you have 100 tenants and five of them move out, you still have 95% of your tenants. So you're still getting that cash flow and you're still cash flow positive. So this is
absolutely.
one of the very big benefits of multifamily. Now, I want to get into some of the details on what the skills that are needed. So you mentioned finding the deal and finding the money. And so what are some skills? Just let's list 3 to 5 skills that people actually would need to learn if they don't have
Yeah,
practice. It's not that, for example, it's not whether they have it or not. It's just how much do they have of it
yeah,
and
for sure.
what they need to get better at in order
So
to actually be successful.
yeah, man, let's break it up into two different skills, right? So let's say finding the deal. So finding the deal, you're gonna have to have the skill set of either, I guess, talking to sellers, skills of negotiation are gonna be
Mhm.
very important. You're gonna have to be able, in my opinion, I think you're gonna have to be somewhat savvy in sales because you're gonna have to sell that seller on a reason of why he should, give you his property at a discount. When you're talking direct to seller on smaller multifamily deals, that's probably where you're gonna get the most bang for your buck, just because you had the ability to come in at a much lower price. On these larger institutional size deals that I syndicate, um, there's it's high competition, a lot of eyeballs on it, and the broker is like squeezing every dollar of value out of that property. So you're not getting as deep a discount as you would get if you're direct to seller on a smaller deal, and you're not even going to be direct to seller on a large portfolio. Typically, I know this one guy Julian I heard of who ended up finding a 700 unit portfolio on a cold call, which is pretty insane. I never heard of that before.
Yeah. That
Um,
was actually on my first call,
yeah,
cold calling. It's a story to tell.
yeah,
It's a
man. That's absolutely nuts. But yeah, um, I'm happy and I'm sad for you at the same time because that level of success right off the bat doesn't paint the real picture of what it's like to be on the phone calling on hundreds and hundreds of leads. Obviously, you can hire a VA to do it, but I want to talk to people who are just starting off with nothing. They have to do this stuff themselves to kind of learn how the business works because if you start a business with nothing and you just hire all these people to do everything, one, you're probably going to go broke really quick because you don't know what you're doing or you don't know how to guide the people that you're hiring. That's one thing, and then the other part of it is you're never really going to learn the ins and outs of the business. So I've been working acquisitions for going on 3 years now, and that's that's one of the things that you're gonna have to have is I guess I don't know if it's a skill so much as a character trait, but you got to be able to be you know have to have tough skin. You know, be okay with the no's, be okay with the failures, because like I said, for me on the underwriting side, for me it's all data driven. It's analytical, right?
Yeah.
If I have to underwrite 100 properties to find one that works, then so be it. That's just what the numbers are, right?
Yep.
It's a needle in the haystack type deal. I can't rush that process no matter how much I want to. I don't want to be overly aggressive and buy something that I'm going to regret later on down the road and get foreclosed on, right? Because scale works both ways in multifamily. You can
Yeah.
scale up, you know, the riches and the rewards and all the wealth creation for sure. But if you buy wrong from day one, you can scale your losses to 100%. You can lose everything. I've seen some people. There's a guy, Jay, I don't know, Indian dude out of Houston. I can't remember his last name, so the G or something like that. But he got foreclosed on. Lost like 5,000 units.
Wow.
Yeah, and all the investors that invested with him, they lost everything.
Yeah.
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 So
That's awful. Yeah. I would see. Yeah. Definitely. It's like when you're doing stocks, like, you can put in a trade and you do you invest with margin.
mhm. Oh
It's
yeah.
like you can gain a lot more, but then you can also lose a lot more than you have. So
Yeah, it's funny you mentioned that because I started off before I got into commercial real estate or real estate in general. I was day trading, right? Because I
yeah.
figured I'm a numbers guy. I love staying behind the computer and all sort of stuff. But one, it was stressful for me, and then two, when I got into margin and I was like, let me 10x my returns, right? Watching all the Grant Cardone stuff. Let me 10x my gain on this bet, and I ended up losing like 20 grand. I was like, oh my
Oh no.
God, how do I tell my wife?
Yeah.
Right?
Yeah. Yeah.
But yeah,
Totally.
real estate's always been good to me. I don't think I haven't lost a dollar in real estate my whole life.
Got it. That's amazing. So yeah. So skills. You mentioned sales and negotiation. That's exactly what you need. You want to mention, another one or two more skills that would definitely need to be improved on.
Yeah, I mean, honestly, it's not that tough, man. You don't need a lot of skills to start off in those. And I say negotiation and sales, but honestly, if you find the right seller just from calling enough sellers, the guy has to sell the property, right? He's going to be in distress or whatever, and he needs help, right? And here you come saying, hey, you know what? I've got some guys who want to buy property, or I want to buy your property. You know, how can we make this work? Come to an agreement. You know, that's a win-win for everybody. So it's not even sale. It's not even salesy. Like, I don't want people to get the wrong impression and think, oh yeah, once I develop these skills, then I can start investing in real estate or I can start in multifamily. It's not necessary. You don't really need the skills. From the underwriting standpoint, yeah, you need to have probably some sense of math, right? If you're
Right.
just not a numbers person or your eyes cross when you look at spreadsheets, one, definitely come to my 5 day challenge so that I can help dispel the fear of math on that because mostly the math is done by the models. I'm not calculating anything. All I'm doing is inputting what the property is doing today and then what other properties around it are doing today as well. And where can I take that property that I'm finding that's undervalued, right, rent wise? And then how can I get it to what market rents are? Because the beautiful thing about multifamily as opposed to residential properties is that residential properties, you know, once you get into something that's like, you know, 65% ARVs, what everybody shoots for, but once you get it to market value, you can only sell it for whatever everybody else is selling their property for. Versus on the commercial side of things, right? Let's just say the difference between commercial and residential is that commercial properties are looked at as if they were a business. They're income driven valuations. So being able to do improvements to that property, operate it a little bit better, lower the expenses, increase the revenue, you're going to increase your NOI, your net operating income, which is a fancy way of saying your rent minus your expenses, right? Once you increase that, you have an exponential growth in the value of the property. That's how you create true wealth, right?
Yeah.
Because you're able to literally make money out of nothing.
Yeah.
And it's a wonderful wonderful vehicle that I found to be able to, become the first millionaire in my family. So,
Yeah, I want to recap a little bit in layman's terms. In residential, there's speculation on the neighborhood. The property's going to rise. In commercial, there's forced appreciation,
yeah,
and what that means is the property's $100, and you buy it, and you know you can raise it to be 125 because you do some improvements, you do some leasing, and so you're not speculating that the area is going to go up. You're speculating that you are going to be able to bring the value up.
yeah,
And so that's a very big difference right there. And so let's move on to some of the beliefs. We have about like 5 minutes, right?
yeah.
So let's quickly go. What beliefs would you have to break in order to get into multifamily?
Uh, Early on, I would say you have to believe that you can do this for one. And
Hmm.
it sounds kind of self-explanatory, but honestly, from where I come from, right? I don't know where everybody else is starting from, but I grew up in not the best part of Miami, not a lot of opportunity. I remember when I was working at KFC, my very first job in high school, and I was working drive-through, and I saw a Maserati. First time I've ever seen like any sort of exotic car, right? Maserati came through the drive-through. I was like, holy crap, what is that? Just never seen it, and maybe on TV, but never in real life. And the guy came through, and I was like, bro, that's a sick ride. How much does that one of those cost? And dude looked at me, dropped his glasses, looked me up and down, and he said, more than you'll ever make.
Oh my God.
I was like, man,
Damn.
what's
This
your
guy's
issue, bro?
old.
But like for whatever reason, man, that always stuck to me that, there's people out there who look at me and they think like, I'm not worth it. And I think a lot of people they'll take that on themselves, like, man, that guy's right, right? I'm not worthy of becoming a millionaire. I'm not the guy to become rich. I'm not the girl to become rich or whatever, right?
Yeah.
So being able to shed the lies that we're told growing up or whatever is highly important. And I think you can do that one from a lot of personal development, reading a lot of nonfiction books. I love reading books like Rich Dad Poor Dad. Obviously, is a big popular one that everybody reads. I read Cash Flow Quadrant. I read Think and Grow Rich, Miracle Morning Millionaire by Hal Elrod, The Slight Edge. And for me, all of these things just help fortify my mentality to understand, like, it's not that there's rich people and that there's poor people. It's that there are people who have rich habits and there are people who have poor habits. And if I look at myself introspectively and I realize that I have poor habits because I get all my money and then I go out and I go shopping or I buy liabilities or I put money in places. I send money away on a mission, right? That's a one-way mission, right? One-way ticket. It's never coming back because it's going into consumerism.
Yeah.
Versus if I have investor habits where I make money, I take that money and I reinvest it. I put money into properties. That property is going to produce me cash flow. Oh, cool. I'm saving my cash flow until I get up to a big amount. And then I take that cash flow and I reinvest again, right? And I just have to have the discipline to not spend that money on the things that would make me very happy temporarily, right? And I'm guilty of this. I got caught up having very fast success in multifamily, and I went out and I bought a Range Rover, and I was like, uh, it sat in my driveway. I work from home, right? So I'm just sitting there looking at this car. It's costing me 2 grand a month. I'm like, man, that car, that SUV, is literally like a syndication that I can put into. So I ended up selling. I took a hit on it. I bought it. I sold it. Lost like $19,000 plus however many car payments I had. And I was like, that was dumb, right? I got caught up in the consumerism. Like, oh yeah, I got some money. I was still reinvesting. I'm still doing deals and all that other stuff. But just because you could do something doesn't mean you should, right? And I know we're talking a lot about mindset, but for me, having the mindset of being able to manage your finances smartly and sacrifice the now for later, because if you give yourself a good 5 years to do something, right, you can hit unimaginable goals. Like I mean, like think about it. 3 years ago, if 3 years ago today, I never even thought that about multifamily at all.
What just to finish it off,
Yeah.
3 years ago you started. Now
Hmm.
3 years later, how much equity do you have? Just so people actually see what is possible if they can stay disciplined and if they can stay focused on this.
Yeah.
What have you done?
So I want to phrase this the right way so people don't get the wrong impression. First off, when you hear door count, I know it sounds good, it sounds attractive, but honestly, it means nothing. It's irrelevant
Yeah,
because my 3311 doors right now are worth about over $500 million,
yeah,
right? But that's the value of the property in its whole. Consider maybe 30% of a down payment on that, so maybe $150 million of equity that's shared amongst investors and the operators, right? My portion of that $150 million is only about 2 million,
yeah.
right? I say only 2 million. It's funny.
It's only
Thinking
2 million, but
about
guys,
that.
he
2 million.
didn't know anything about multifamily three
Yeah.
years ago. He literally he went into a course and learned, and it was the learning and the doing in the 3 years. It wasn't like he learned like 6 months before the 3 years. No, like he started learning and did
It'll be 3 years in October since my first deal. So
exactly.
about 2.5 years now. Yeah. But yeah, man, I definitely think it's possible for a lot of people. The more that I grow, the more that I learn about this industry, the easier it is for me to identify opportunities and capitalize on them. And I think with the way the economy is going, we're like at there's like I think $1.6 trillion of commercial loans that are coming due this year that I think a lot of people are going to be upside down on. And it's going to be that next cycle that everybody is kind of like anticipating, that they feel is coming around the corner. And I really urge people to get educated, learn how this business works. So when that 08, 09 like repeat happens in the next 6 to 12 months, you can be in position to capitalize on that and set yourself up for the rest of your life by being in the right place, the right time with the right knowledge. So yeah, my 5 day challenge, man, mymultifamilywealth.com. Join me. I'll share everything that I've learned and try to help you guys get started on the right foot in multifamily investing.
That's great. Razul, thank you so much. And please, guys, I'm actually going to be attending Razul's My Multifamily Wealth challenge. And if anybody joins, please let me know because I want to get to know who you are because that kind of person just shows me that you're serious about learning. And when you have a team around you who's also doing this, we can help each other grow. And so you're not alone in this. Razul and I are here for you, and we'd like to see you in mymultifamilywealth.com. So take care, guys.
Thanks, Julian.